Hi guys, I'm back. Sorry for my unexplained absence. Today we're going to revisit natural gas futures and we'll check out the Canadian dollar Japanese yen. Stay tuned. Hi, this is Tim from TradingStrategyGuides.com. Again, I'm sorry for my unexplained absence. My wife and I had some medical issues that had us a bit laid up. Stick around to the end of the video and I'll fill you in on the details. Today we'll be looking once again at a bull flag on natural gas futures and a trading range on the Canadian dollar Japanese yen forex currency pair. We'll take a look at those, but first we'll check out the active trades and later on this week's trading maxim. I hope your new year is turning out well. Happy Monday. Let's take a look at our active trades. So, being sick, I didn't keep up with my trailing stops. But for once, that may have turned out to be a good thing. When Bitcoin pulled back down here, my stop was in here somewhere. So, I didn't get stopped out. Of course, Bitcoin is still on a tear, breaking the 40K point on Friday of last week. I'm back to trailing my stops, and as of Saturday the 9th, I'm currently at 29,184, locking in 78.5163 on my second half. We'll see how it goes from there. Well, Apple dropped down here, stopped me out break even on my second half. So I'm done with Apple for right now with a 0.89% account gain. I'll take it. And lastly, the Kiwi Swissy triggered a buy last Wednesday right here. I'm in around 64.13. Stop loss is 63.37. First target is 64.64. And that is all the active trades for today. Let's take a look at today's trade picks. Okay, I'm looking back at a redrawn bull flag on natural gas. As you may remember, this popped up. I bought it, ended up getting stopped out down here, but I like this better. This pattern actually fits better. So I'm taking another shot at this thing. A bull flag consists of an incoming trend like this one here, and then a descending parallel price channel like this. A bull flag is a bullish consolidation, so I will only take a buy trigger on this. The pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR. And here's the trade plan. We're going to buy a daily candle close above the bull flag. On the breaking candle, we want to see the volume reach up here to the volume average to take a full-size position. If it doesn't quite reach the average but does reach 75% of the average volume, I'll take a half-size position to reduce risk. You can calculate that percentage by taking this volume number, dividing it by this volume average, and you should get at least 0.75. If you don't get that, I would stand aside on this trade. The stop loss is 1.5 times the ATR. The first target is 1 times the ATR. So on the day this thing breaks, be prepared to take a buy order. Look down here at the ATR, multiply that by 1.5. Your stop loss will be that distance behind the entry, and your first target will be 1 ATR above the entry. If after entering the trade we get a candle that closes back inside the flag, we'll take the loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. I will only risk about 2% of my account on each trade. And that's today's setup on natural gas. Next, we have a trading range on the Canadian dollar Japanese yen forex pair. Just to be sure everyone's with us on this, a trading range is a consolidation with a strong support level, like this one at 78, and a strong resistance level, like this one up at 82.10. Price just sort of banks back and forth between these levels until it eventually explodes out of the range in one direction or the other. I'll take a break of a trading range in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. And as I mentioned, volatility is the amount of daily price movement measured with the average true range. And here's the trade plan. We're going to buy a daily candle close above the range or above 82.10, or we'll sell a daily candle close below the range or below 78. I'm not going to bore you with the whole spiel again. The management details are always the same. If there is at least average volume, enter a full-size position. If there's only 75% of the volume, enter a half-size position. Otherwise, stand aside. Stop loss, of course, is 1.5 times the ATR. First target is 1 times the ATR. And if you get a candle close back inside the range after you enter the position, close the position and take the loss. Get half off for profit when it hits the first target and move the stop to break even on the remainder. 2% risk on this trade, and that's today's setup on the Canadian dollar Japanese yen forex currency pair. Okay guys, you know how I manage these trades. You do you, okay? Make sure you understand what you're comfortable with and trade it that way. And to help me figure out what's going on in my head and what I'm comfortable with, I use the trading maxims to keep me in line. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. You guys know the deal. Use whatever tools help you maintain discipline, because discipline and consistency in everything are paramount. And today, Tim's trading maxim number 35. The markets can remain irrational longer than we can remain solvent. And that's a quote from either Keynes or Schilling or some unknown person. I don't think anyone really knows to whom the credit for this quote should go. In any case, this is a critical concept to understand in profitable trading. You'll hear traders who are losing a trade pretty hard say that, oh, the price will always come back, right? And you know what? In my experience, they are absolutely correct. The price will always come back. In fact, you can look back at the charts and see that it does actually always come back. Now, does that mean you should hold on to it until it comes back? Well, I suppose you could try. In fact, I've tried a few times. You know what I discovered? Number one, it rarely comes right back. In fact, it can go way away from you before it comes back. Number two, I almost always regret holding on to it, mostly because it's stressful. But most importantly, number three, how much money would you have made with that equity if you had just taken the loss when the loss was reasonable and invested that margin in a winner, or 4 winners, a loser and 3 winners, or something like that? Plus, of course, you probably would have slept better all that time too. Remember, the market has the ability to go against you for a very long time. So just be an adult and take the loss and move on to the next trade. Your stomach will thank me. Remember our natural gas trade plan for today. We're going to buy a daily candle close above the bull flag. And our Canadian dollar Japanese yen trade plan, we're going to buy a daily candle close above the range or above 82.10. Or we'll sell a daily candle close below the range or below 78. For both trades, take a full-size position if you've got average volume or better, half size if you've got 75% average volume or better. Your stop loss is 1.5 times the ATR. Your first target is 1 times the ATR. And you can look in the description box for a link to the trade management video. And don't forget to sign up for my Trading Picks email list to get early notification of these picks. The link is also in the description box. Okay, I promised to fill you in on what's been going on. Well, it started when my wife and I both contracted COVID-19. We have successfully avoided it for this long. The short version of this is we both ended up in the hospital. My wife is still having trouble with pneumonia, but I'm pretty much recovered from it all, except that we're both totally dragged out. We are both home now, and all we ever want to do is sleep. But my health seems to be improving, so unless something untoward happens, I should be back on my regular video schedule. I hope I haven't caused anyone any inconvenience. Be sure to come back Wednesday for the next installment of the Trading Education Series. This time we're going to talk about the MACD indicator. Be here Friday for my Strategy of the Week and next Monday for my trade picks. All of my videos come out at 3 p.m. New York time. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one, and I apologize if I've gotten behind in answering questions. I will try to get that caught up during this week. If this video helped you, click the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great week, and I will see you Wednesday.